Hey, how are you? Welcome back to this little training series. Today we're talking about condo insurance. And this video is to help you understand the ins and outs of the coverages in a condo policy, understand how the condo policy works, how it's different from a homeowner's or a landlord policy, and the other forms of homeowners insurance. You can use this knowledge for yourself. You can use it for training your team, and we will use it for training our team. So let's dive into it. So, as you know, a condo policy is not like a condo is not a single family residence. It's not a standalone building. It is usually a unit that is within a larger building that is shared walls. There's somebody above, somebody on the side, somebody behind them. And, the condo is connected to other units typically. So, what happens there is that whole structure isn't what you are insuring with this condo HO6 policy. What you're covering is the unit itself, the interior unit. The whole structure is typically owned and insured by the HOA, which is a homeowners association. The homeowners association is all the condo unit owners coming together as an association, and they are providing, several other key benefits to a condo owner, but they are the ones who have a master policy which covers the whole structure. You as the condo owner are responsible for insuring the inside your unit, and I'll explain the key coverages there as well. So let's dive into each one. So there's a dwelling coverage similar to like a homeowner's policy. You're covered for fire, for smoke damage, etc. And this is called also like a walls-in policy. This covers the actual interior walls of the condo unit. It's not the whole outside, like I said. So anything that's attached, like for cabinets on the walls, the floors, ceilings, anything that's inside the unit is covered under dwelling. So you'll see this limit is usually a lot lower than you'll see for like a standard reconstruction cost of a homeowner's policy. Like I said, it's roughly $300 per square foot in California currently in December of 2021. But for a condo, it's a lot trickier to determine that dwelling limit. So you need to be prepared to ask how many updates have been made on a condo, understand how much it would really take to reconstruct the interior walls. The standard we usually see is just like for a small, let's just say 800 to 1,000 square foot, condo unit, we'll see somewhere between I know this seems super low, 25K to 50K in dwelling coverage for the interior walls. I usually like to bump them up even more than that, just based on the quality of the grade of the build and the inside of the condo. But that's kind of what we're looking at. So very much a lot lower than an actual home. So that's the dwelling coverage to go in there. As I said, always double check with underwriting, double check with your customer, make sure this is adequate coverage when you do a condo policy. This is not a cookie cutter thing. You need to make sure that you find the right adequate coverage. Personal property coverage, similar to a homeowner's policy, to a renter's policy, it covers your actual stuff, your TVs, your furniture, chairs, loose items in the home. So this also is completely dependent on how much coverage the insured needs and the client needs. If they just have a few things, you can give them $10,000 in personal property coverage. If they have a ton of stuff, super nice TVs, furniture, etc., they got to have, $50,000 or $100,000. Make sure to always ask and give kind of an estimate. How much do you think your stuff's worth? Loss of use. So loss of use, similar to a homeowner's, like I said, the loss of use is if you can't use your unit because there's a fire, something happened, it's uninhabitable. This is coverage for you to go and get a hotel, other living expenses, additional living expenses that are incurred because you are now no longer able to occupy your home, your condo, your unit. So, this also kind of depends on the different coverages. Sometimes it can range, you can set it, 25,000. It really just depends. So these are numbers. The condo policy is not a cookie cutter coverage. policy, you really have to tailor it specifically to your client. Next, personal liability. This one is pretty consistent across the board. You can range it, and most companies can start at the lowest at 100K and up to 1 million. So understand your client's liability exposure. If they have a bunch of other assets, bump them up, give them $1 million in liability coverage. And then finally, last one, medical payments. This is the highest usually with most companies. You sometimes can go up to 10,000. As I said before in other videos, this is for like a standard, like x-rays or ambulance costs, other additional little like medical payments that wouldn't fall into like a liability lawsuit. This is coverage for that kind of thing. Last thing, this is actually an additional coverage that is not in these. These are the main coverage A, C, D, E, and F. But then there's additional coverages, and there's what's called loss assessment. I'm totally spelling this wrong, but this is coverage for common areas. So there are shared spaces in condos that sometimes your HOA might not cover, and your actual policy has coverage for common area liability claims. So you need to have that coverage as well on a condo policy for potential, like let's just say there's like a little courtyard and somebody gets hurt or something happens in that courtyard and they sue you as the condo owner or the unit owner. Even though that was a common area in the condo, you might be held liable because for whatever reason they sued you as the unit owner. So loss assessment for shared areas in a condo space or a townhome or something along those lines. So that's all I got. Hopefully that kind of breaks down a little bit more clear what condo policies, how they work. Also, please note that there are two types. There's owner-occupied condos and non-owner-occupied condos. So if it's non-owner-occupied, this would essentially be like a landlord policy, but it is for a condo. Like a condo is a condo is a condo. Always the same. Whether it's owner-occupied or non-owner-occupied, you need to know that, and that's another selection on when you're submitting a policy. So that's another question. Always find out owner or non-owner. You need to know one of those two. So that's all I got. Hopefully that helps explain it a bit, and we will continue making these little segments where we break down the coverages and condos and homeowners, landlords, etc., auto insurance. Hopefully that helps out, and we will see you guys soon. Feel free to reach out, give us a like, drop a comment below. If there's anything specifically you want to hear about, I'm happy to do so. Check out chriscostantini.com as well. If you have any questions or you want further explanation, happy to help out. That's all I got. We'll see you guys at the top. See ya. Peace. Of use, so similar to a homeowner's policy, you basically have coverage for, of a condo, condo insurance. So this is to, it's okay. A homeowner's policy is, there is a major, we have shared walls and are in a, common area where there is,